Shall I get to Darrell Cronk?
Please, he's
do that now?
fugacious.
Okay, Wells Fargo Wealth and Investment Management CIO Darrell Cronk, wondering what program he's just joined. Darrell, thank you for being with us, sir. Can we go to the
John.
market story this morning, which is deeper real yields and a slightly confusing sector composition story in the equity market? What's your read on it at the moment, Darrell?
Yeah, I think you guys are right on top of it as usual. The real yield story is the story, negative 90 basis points on real yields. Investors should not stand for negative 90 basis points of real yield. So naturally, that's going to be positive for risk assets. It's going to push money into equities. It's going to continue to push money into commodities. I mean, a year ago, you had crude oil at 25, today it's 65. A year ago, lumber prices were $300. Today, they're $1,500, right? So there's a huge inflation push in the economy that's not getting recognized by the bond market. If you simply just go back, John, to the global financial crisis and right after at same time, there's a lot of comparisons that this is similar to that. You had positive 50 basis points real yield. Today, you've got negative 90 basis points with a ton more fiscal stimulus, an economy that's going to come back quicker, and an output gap that's going to close faster.
I look, Darrell, at the dynamics right now, the bond market where it is. What are you telling your clients right now of how to study bonds?
So I think it's a generation that has not experienced rising yields, rising commodity prices, value stocks outperforming, right? I can go on and on with the list, right?
So you're talking about John and Lisa.
Well, not quite, but I think they've been around longer than that. But the point is, you shouldn't be surprised that you've got, technology underperforming as a long-duration asset with the highest tax base, right? It has a negative correlation to rising inflation. And so when that happens, you get some of that money coming off the table. It's a growth-oriented factor. So I think investors have to see the sea change that's happening right in front of them, right? It is about value over growth. It's outperformed 1,100 basis points on the Russell 1000 value over the Russell 1000 growth year to date, right? It is about commodity prices going higher. It is about a bear steepening of the yield curve. I know it's not happening today, but it's going to happen if the inflation pressures keep pushing through like we see them doing.
Darrell, you're invited back, by the way, just because you are coming to my and John's defense. There is a question, though. What happens if bonds are right? People often think of bonds as the smarter asset class. I'm sure I'll get hate mail. You can send it all here. There is this thought, though, that perhaps they're seeing something that equities are not, and that is perhaps inflation that is not rising as much. Why could that not be the case, and what happens to equities if bonds are right?
Well, if the bond market is right, then yes, you're correct. Equities would have to come down and probably reprice, right? Because you're going to catch a bid in the bond market, you're going to flatten the yield curve and drive it down. The second quarter GDP right now is tracking at 12% on a run rate for Q2. I just don't see how that's not getting reflected in. Some people are calling for peak GDP, but there is so much liquidity in the system, right? There's $2 trillion sitting on S&P balance sheets. There's $4.7 trillion sitting in money market funds, and there's almost $16 trillion in commercial bank deposits sitting out there. That money has to go somewhere. It will go somewhere, right? And that's going to continue to push inflationary pressures higher, notwithstanding supply chain pressures and everything else we talk about. So it is possible, but I still would contend the bond market actually right now is not getting it right.
Darrell, got to leave it there. Darrell Cronk, Wells Fargo Wealth and Investment Management CIO. Terminal subscribers responded to that debate. We are the smarter asset class, Lisa. You don't need to look around any corners to see that.